Boston.
Good morning, everyone. Marc Rosenthal with you on this Tuesday. Here's what's happening. We're looking at lots of sunshine. It'll be hot today. Temperatures not far from 90. If you're in the sun, please use sunscreen. Overnight, mostly clear and mild temperatures by morning in the mid-60s. And for tomorrow, a mixture of sun and clouds, hot and buggy near 90. Slight chance of a late-day shower or thunderstorm. Thursday, hazy, hot and buggy weather. Forecast being brought to you by T&K Asphalt. T&K Asphalt provides commercial paving, line striping, concrete and construction services, and so much more for business owners and property managers throughout New England. See them online at tkasphalt.com. That's my forecast. I'm Marc Rosenthal.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
Bye, guys.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
A trust can do a lot more than simply pass assets to your family. Certain trusts may help keep your estate out of probate, protect assets for your children, and in some cases, even help reduce estate tax liability. Cushing & Dolan has created a new guide called Demystifying the Top Estate Planning Trusts. It breaks down some of the most commonly used trusts in estate planning, including trusts designed to help families plan for long-term care, protect beneficiaries with special needs, and help keep life insurance proceeds outside of a taxable estate. You'll also learn why simply having a trust isn't enough, because if it isn't properly funded, it may not accomplish the goals you expect. To get your free copy, call Cushing & Dolan today at 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is on understanding required minimum distributions. Mike, every year there's a new group of people that gets faced with the fact that they have to take money out of retirement accounts at a certain age. What are the rules of the road?
Yeah, so for your own retirement accounts, and this is pretty universal now, the age used to be age 70 and a half. A lot of people have that number stuck in their mind. These days, if you were born in 1960 or later, the age you need to be focused on is the year in which you turn 75 years old. That is when your required minimum distribution from your traditional retirement plan or account is going to begin.
how much does someone have to take from that retirement account each year?
So it's based on your life expectancy at the time. Rounding, it's close to 4% in that first year. But by the time you're in your 90s, it's then approaching 10%. So it's this sliding scale. But again, this is all based on your own retirement account. And there are all sorts of complexities and ins and outs with this. So I don't want to oversimplify things. If you've got a 401k, that's different than having an IRA. If you inherited your retirement account from a loved one that wasn't your spouse, there's a whole series of other rules that will apply to you. And so it's complicated and you need to focus on it.
Our guide this month is titled Understanding RMDs, and there are two ways you can request it. The first is by calling 800-393-4001. The second, go to armstrongadvisory.com. That phone number again is 800-393-4001 or visit armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Welcome back to the Financial Exchange here on a Tuesday where markets are continuing to claw back their losses from a steep sell-off on Friday. The S&P Friday down more than 2%, NASDAQ off more than 4%. We had markets claw back some of that yesterday, although they ended up closing the day a lot lower than where they started the morning. And this morning in early trading, we're seeing the S&P 500 up about 0.7% so far. It's a CPI week. We'll be getting inflation data tomorrow morning. We got data on existing home sales today. But the story of the week, in my opinion at least, is the continued AI mania. We've got the SpaceX IPO heating up, and today it's being announced that OpenAI has filed paperwork to go public in a continued test of investors' appetite for these AI behemoths. And you know, I shouldn't really lump SpaceX into the same category as Anthropic and OpenAI, but they're clearly making a bunch of statements about their business that they want to be considered that way. And so nonetheless, we have big names raising a lot of money today. And I wanted to start off right there, Marc, before we get into inflation or home sales or, you know, giving you the opportunity to beat up on the new Fed chair that hasn't even had a press conference yet. I thought we would talk about the numbers here for a moment and just the scale of what we're talking about, because everyone's aware that some very big names are going public. I would have to argue that SpaceX, in terms of name recognition, has to be the most brand recognized name since Facebook went public over a decade ago now. Might have been mid-2010s. It was a long time ago, though. No, it was over a decade again. It was early 2010s that Facebook went public. And between the three of them, right, SpaceX is raising $75 billion. OpenAI and Anthropic are rumored to be raising $60 billion apiece. So between those three, you're pushing $200 billion. Google's parent company, Alphabet, announced an $80 billion fundraising round via stock sales. Again, already a public company, but raising new money. And we're sitting here looking at a a series of offerings here. I only named 4 of them. Obviously, all sorts of tech players have been issuing shares, borrowing money to do this AI build-out. And I guess I'm just wondering, and I think others are too, where precisely does $270 billion come from to absorb these stock sales into public markets? Because it's not I was trying to get some comparisons. The American public spends between $230 and $250 billion a year on alcohol. We donate about $590 billion a year to charity and pay about $500 billion in state income taxes every year. So to give you the scale of this stuff, these are massive dollar amounts that these companies are looking for new money to come from somewhere. I don't think it's coming from alcohol sales, but how big is this for these companies to be raising this much money, and are other assets going to fall in value in order to afford it, I guess, is part of the question.
No, not necessarily. People could take it from any number of. So SpaceX is raising about $556 billion, right?
So I think the total initial raise is 75.
Excuse me, is 556 million shares.
Yeah,
excuse me.
$75 billion
times
of
135
raise.
A share. Pardon me. Yeah.
And then the other two are like 60 apiece.
Yeah. Okay. So they're selling about 560 million shares for 135 each. That's how you get to the capital raise. It's just the product of those two things. Where will the money come from? I mean, who knows? People might sell a little bit of something else. They might sell some cash, money from a savings account. But you're right. Overall, the world economy is sort of a closed, system. So it's not going to come. It's got to come from somewhere.
The Treasury doesn't just print more dollars for IPOs. That's not what happens.
Right.
And so I guess I've just been left pondering, like, where does all this come from, right? We've seen Bitcoin sell off substantially this year. It's down to about $62,000 per coin after topping out at $115,000 a coin back in October of last year. We've seen bond yields rise, but I think that's largely attributable to inflation concerns. But I suppose some of it could be selling bonds for this type of thing. But it is, I don't know. I don't know that there's been another time in a short period of time where all of these new assets are raising money this rapidly. And I'm just curious as to what the net result will be. I don't think we know what it could be.
If they don't live up to their promise, the net result is going to be a massive misallocation of capital and a big bust at some point.
Right.
And that may be in the cards already if the gains from AI don't accrue to the companies that are today making these investments. And history suggests they probably won't.
Right.
Others will move into that space, do things better. AI may have big economic benefits, but the provision of it may become commoditized. I just said the same thing, I think, in two slightly different ways.
Yeah, but it is a fair point that historically speaking, no, the gains that have been that have gone to society as a whole from new technology have not necessarily been the companies that have been raising all the money in the first time, and a lot does need to go right for this to be executed upon, right? Like, when people are talking about buying computing power in the future, it's being talked about as though it's a foregone conclusion that Google and Facebook and all these companies will be successful in building out data centers, that they will be, successful in charging what they think they will be able to, and that all remains an open question. But for the moment, we are going to be piling on IPO after IPO, and the SpaceX one I think will be fascinating because it's an Elon Musk company, and everybody has seen how his other company, Tesla, has been able to just draw a valuation that is richer than any car company in history and any car company, that does the same type of thing because he's Elon Musk and seems to be able to demand that sort of thing. So I think the SpaceX one, based on the very lofty goals that they have set out for themselves, will be fascinating to watch. I have no real guess as to whether it'll be deemed successful or not. But more interesting than that, the fact that OpenAI and Anthropic, two companies that effectively do the exact same thing, Right? They might have different structures. They were founded under different principles. All those things might be true. But they both design AI models specifically.
SpaceX, too, right. Most of their revenues, according to Goldman, who's underwriting this, are expected to come not from launches and stuff like that, but from artificial intelligence.
It's expected to, but I'm not sure I buy it. Right? Like
You
go take a look at their business today. What drives the bottom line? It's Starlink launching satellites for internet service. So I know they have very lofty expectations about where the revenue is going to come from, but today you're buying a rocket company, and whether or not they can execute.
That's not what markets are being told by the people peddling this thing.
Yeah, the markets are being told.
They're buying that valuation as an AI valuation, right?
Absolutely. So we do have a lot of this coming to market over the course of the next several months, and I guess the point that I would make is, any one IPO, we tend to think of it purely in terms of, hey, what's going to happen with the price of the IPO on the day of and the months after? Oftentimes they are quite volatile. With the scale of these, I'm starting to wonder not only what is going to happen with those companies, but where is the money going to come from in order to afford this? Again, 280
to afford the investments they want to make in data centers, or
to afford the
capital
money
they want to raise from markets.
The capital they want to raise from markets. Increasingly, I'm wondering about that, and not to say that there isn't plenty to go around. It's not as though margin balances appear to be stretched thin, or could people borrow off of homes or all sorts of sources in order to afford this? Yes, absolutely. But it is not an insignificant amount of money that we're talking about.
Some of it is mechanically going to come from other publicly listed companies. When you think about how NASDAQ is handling the inclusion of SpaceX, you and Chuck Zada probably talked about the fact that they're waiving their usual requirements for inclusion in the NASDAQ 100 or the NASDAQ composite. Many people own the QQQ. It's going in there.
Yeah,
it's
so
going
if you
in there.
own one of these NASDAQ-tracked funds, then naturally you're going to sell
But it ain't
every other
going in
company.
at $2 trillion. It's going in at 3 times the free float. The free float is what you and I what anybody who gets in on this could buy. That's the 560, I'll round up, million shares. That's about $250 billion at $135 a share. So it's going to be like top 25 in the NASDAQ 100, I think, and it's going to displace, well, a little, you could think of it this way, a little bit of that is going to come from everything else. So that's one answer to your question, Mike.
Let's take a quick break. When we come back, I want to get to a little bit of the data that was released this morning, including existing home sales. That's next here on the Financial Exchange.
Stay informed and prepared for market changes and breaking business news. The Financial Exchange is live every day on YouTube. Tune in, subscribe, and keep up to date on all of our show's content on a daily basis. This is the Financial Exchange Radio Network.
This is Susan Powers from the Armstrong Advisory Group. When it comes to Social Security and Medicare, the decisions you make today can have a lasting impact on your retirement. There are key choices to consider, like when to claim, how spousal and survivor options work, and whether your Medicare coverage is aligned with your needs. Without a clear strategy, it's easy to overlook how taxes, income, and healthcare costs all connect. Join us for a complimentary educational seminar on Thursday, June 25th at 5 p.m. at the Marriott in Quincy. We'll help you understand your options and the decisions that come with them. That's Thursday, June 25th at 5 p.m. at the Marriott in Quincy. Reserve your seat today by calling 800-393-4001. That's 800-393-4001 or register online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. please visit dav5k.boston. That's dav5k.boston.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
Subscribe now to our YouTube page where you'll find daily interviews and full shows of the Financial Exchange. You'll get caught up on anything and everything you might have missed right here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and be sure to hit that subscribe button.
The National Association of Realtors this morning published their used home data. I like that better than existing homes. But they published their information on home sales across the country. And what we saw was not a huge surprise. And I don't know. I don't think either great news or bad, terrible news, but does confirm what we're seeing as a sluggish home sales market. So first off, the data nationally, 3.2% increase in existing home sales. That came at a seasonally adjusted rate of 4.17 million homes in the month of May. The price went up a little bit to about $429,000. That's the median price of all homes sold in May across the country. The regional data, I think, is also telling here in terms of where this is happening. No surprise. But in the Northeast, we are seeing year-over-year sales down 8% and median price up. In the Midwest, you're seeing year-over-year increase of only 2%. In the South, that's where you're seeing some of the uptick here. So sales were up nearly 6% year-over-year. And prices were just about flat, only up 1%. In the West as well, you saw sales up 5.6%, and the median price moved down. So overall, I think this paints the same narrative that we have been seeing and why some have been disappointed by the housing market this year. We saw last year a pretty big uptick in sales, uptick in inventory. This year, for a number of different reasons, but largely mortgage rates, which are a byproduct of both inflation that we're seeing, which is partly related to the war in Iran and everything else going on. We've seen mortgage rates for the spring housing market, move between, a low of, let's call it 6.33% and a high of nearly 7%. And so, in that environment where I think a lot of people, because this is where rates were back in February, were anticipating getting a mortgage at 5.9% or somewhere in that range, are now facing down a mortgage that's 0.5% higher than they were anticipating, and struggling to worries about gas prices and everything else that might be stripping out their budget.
This is one of the reasons why some commentators have observed that the demand for capital by AI companies for data centers or to launch data centers into space, whatever, this will, all else equal, and that's an important caveat, put upward pressure on interest rates. The example that we talked about in the first segment of money flowing out of other asset classes and into stocks for example, the SpaceX IPO or whatever. There are going to be others. If that money comes out of, say, bonds, and that's probably an unrealistic assumption because capital markets are far more complex, but some of it could, that will push up the yield on bonds because of the inverse relationship between price and yield. So that's one answer to the question you asked earlier. Where's the money going to come from? And it also illustrates an implication of this voracious appetite for capital on the part of AI companies.
The other, plainer to understand, I think, implication here, and we're going to cover a story later about Facebook's parent company Meta rolling out a training program for, basically getting your electrician, plumbing, HVAC training up and running so you can get a job building up one of their data centers. Is if you are, a big home builder trying to start a 2,000 unit development, it can't be easy right now to find the labor, let alone all of the physical supplies that go into building a home that are getting, driven up in price. It's easier and easier to look at this AI boom, at least in the short term, as inflationary rather than disinflationary. Right? Like, I know that you've never bought that this was going to be disinflationary in the first place, but that has been touted as, especially by Kevin Warsh, as a potential outcome here. And more in the short term, I'm buying into the fact that this is going to be one direction only, and it's inflationary.
Look, what Warsh means by that is that it's possible AI increases productivity at a rate in excess of the rate at which wages are going up. If workers get more productive at a faster rate than their salary increases, all else equal, that should mitigate inflation. That's what Warsh means. Of course, that hasn't happened yet. We don't know.
Right.
And there are lots of good arguments much stronger arguments on the other side of that.
Market Watch has what I might deem the useless piece of the day. The latest rally may only be a dead cat bounce, warns a normally bullish boutique. So the technical analysis points to a summer slide, says Fund Strats Newton. And here is one of the quotes that I'll pull from it. Quote, my SPX cycle composite projected a peak right around current levels and now has rolled over, turning negative between now and at least July with the risk of lower something or another. Mark, do you know what that means? What I just said. Do you have any idea what that means?
I'm sorry, I didn't read the piece, to be honest.
Because it's useless.
Because I saw it was based on technical analysis, and that's fine, but technical analysis tends to be very subjective. People tend to see things in charts differently depending on the observer. Sorry.
Tucker, do you know what that means?
No.
I don't know what that means. Here's my only...
Read it again. Maybe we can figure it out.
Okay. My SPX cycle composite projected a peak right around current levels and has now rolled over, turning negative between now and at least late July.
I understand what they're saying, but that's not very revealing.
Yeah. I think my main message here, like we cover with a lot of these pieces, is if you too don't know what that means, because I don't have the context to understand what his cycle composite is that's modeling out future returns. And if you don't either, then you should probably ignore a piece like this.
Well, technical analysis has nothing to do with future returns. They're interested in, is there a turning point coming, or is there room for more growth? A simpler way to put it is the 200-day moving average, because you get the same. I mean, I occasionally fool around with technical indicators because they're fun.
Sure.
You can get in your spreadsheet or your statistical program and create your own world. What he's saying is stocks have run up by a lot, say 200-day moving average relative to a shorter-term moving average, or vice versa. Everybody's got a different measure. That's all that little word salad is trying to convey.
This market that had earlier started off out of the gates pretty strong has weakened pretty substantially now as we head towards 1030 here. The Nasdaq now barely holding on to gains. The S&P 500 up only 1/3%. I don't see any breaking news out there. Just a turn in markets in early trading here, which is not dissimilar to what we saw yesterday afternoon. We're going to take a quick break, but when we come back, Tucker's going to have a full recap here with Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One missed retirement deadline could cost you thousands of dollars. Our new guide, Understanding RMDs, breaks down the rules for required minimum distributions, including when you have to take them and what can happen if you get it wrong. This isn't just about taking money out of an account. Your RMDs may affect your tax bracket, the taxation of your Social Security, and even whether you pay higher Medicare premiums. This guide also covers common mistakes people make, like forgetting about old retirement accounts and mishandling inherited IRAs. If you have money in a retirement account, this is information you need to know. Call us right now at 800-393-4001 to get your free copy of Understanding RMDs. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. If there are younger families out there, should they consider having a trust in place, and what type?
Most people don't think about it when you're young, but if you're a young family, meaning you've got minor children, you might not have a ton of assets yet, but you want to make sure that what you do have is protected for your children. You could probably use a revocable trust. I don't think you need an irrevocable trust, but a revocable trust. You put your assets in. Again, they're going to avoid probate. Again, it may or may not be a big estate tax issue at the moment, but whatever you have, your children can own, right? right? They are minors. So you don't necessarily want to leave your assets to a guardian and have the guardian deal with everything when you can design a trust to hold the assets and ensure how and when and where and why they get these assets. Just pick the right trustee, put the language you need in the trust to control it for those children, and the trust will accomplish that task. So just because you're young, folks, doesn't mean you shouldn't think about your estate planning. Sometimes it's not all about the money and the probate and the taxes, but more so about the family behind the estate plan.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they have written a brand new guide called Demystifying the Top 7 Estate Planning Trusts. Call right now for your free copy, 866-848-5699. That's 866-848-5699. Or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are now giving back gains after a strong start to the day. Oil prices also pulling back after President Trump said that a deal with Iran was only days away. Right now, the Dow is up about 0.6% or 295 points. S&P 500 is up about 0.25% or 20 points higher. NASDAQ now down by 7 points. Russell 2000 is up about 1.5%. 10-year Treasury yield down 1 basis point at 4.53%. And oil pulling back nearly 4% now, trading at $87 a barrel. After rallying nearly 10% yesterday, Marvell Technology shares are down over 6% today. The recent gains come following news that Marvell will be included in the S&P 500 later this month. Meanwhile, shares in U.S. drug maker Nuvalent surging 38% after UK biopharmaceutical company GSK announced a $10.6 billion agreement to acquire the Boston-based cancer drug developer. Elsewhere, ski operator Vail Resorts cut its full-year forecast, where low snowfall weighed on visits and revenue. That stock down by 5%. J.M. Smucker beat earnings and revenue expectations for the previous quarter, sending shares up by 11%. And Apple now down by 3% following the tech giant's Worldwide Developers Conference yesterday. Apple revealed a new AI-powered version of its Siri digital assistant that includes a variety of upgrades that bring it closer to OpenAI's ChatGPT and Google's Gemini, enabling Apple users to have back-and-forth conversations and complete tasks. Again, Apple down by 3%. I'm Tucker Silva, and that is Wall Street Watch.
All right, Mark. Bloomberg reporting that Treasury market is telling Kevin Warsh that rates need to be higher. For all of us that don't speak Treasury, can you translate this to us? Because the target rate right now is between 3.5 and 3.75. So what's the Treasury market telling Kevin Warsh?
When you want to put money in a place where it's likely to be returned, you probably look to the Treasury market first. One option is just to put it in a very short-term Treasury obligation, a T-bill. Matures in a year or less, and it pays something more than what you put in at the end. There's no coupon in between because it's very short term. You could do that.
The 1 year yield on a U.S. Treasury right now is 3.812%, according to CNBC.
Yeah. So you could do that, or you could buy, say, a 10-year Treasury and get about 4.5-ish%. Yeah. So why would you ever buy the 1 year instead of the 10-year? You get a higher yield on the 10-year. The short answer is that between now and 10 years, a lot of things could happen. Inflation could go up. The fiscal situation in the U.S. could deteriorate further, resulting in people demanding more to buy treasuries. Stuff. Interest rates could go up for different reasons. Let's forget about why. Keep this simple. The reason why you hold a 1 year and then roll that over every year, just like with a bank CD, is that there's risk in holding a 10-year. Rates could go up in the interim. It could go the other way and work for you, which it did in the early 80s, but most people view it as riskier to hold a 10-year for that reason. So when rates longer than, say, 6 months or so start creeping up, it's because one interpretation, you never know for sure, is that markets think the Fed's going to have to raise rates to fight inflation.
And to be clear, like we said, the Fed's target rate is between 3.5 and 3.75. And so when I look at the 1 month Treasury, it's at like 3.7.
That's what you should get.
Right around there.
That's what you should
When I look at the 2-year, though, we're looking at a rate over 4%.
That's interesting. So why is there half a percentage point, call it half, I'm rounding up a little bit, or down, difference there? Because there's an increasing probability, chance, that the Fed's going to have to raise rates to staunch inflation. And that's really the full explanation. It's the only reason why a longer-term rate would be higher than a shorter-term rate. And you could extend that logic to the not just the 2-year, but the 5-year, the 7-year. There are various. You could buy a Treasury that matures at any time.
Sure.
If you want to buy a used one, so to speak, an off-the-run Treasury. On the run, they come in specific terms to maturity. That's why people often talk about it as a 1, 3, a 5, a 7, or something.
Which is actually like how bond markets traditionally work. We've talked in the past about yield curve inversion, right? When the 10-year yield is lower than the 2-year yield, and how
that's like the opposite of what we were just talking about.
You think that the economy is going to crash in that case.
People think interest rates will be lower in 10 years, all else equal, than today.
Yep.
Or they'll get a lot lower in the interim, which in turn drags down even longer term rates. I'm making it probably sound a little bit more complicated than it is. It's really common sense. It's the same calculation you go through when you go to the bank and say,
sure,
should I go for the 12-month CD or the 60-month CD? I get a slightly higher yield on the 60-month, but boy, I don't think this Fed's going to be able to control inflation. It's at 4 today. I think it's going to be 5, in which case you want to buy the 1 year and then see what happens.
So speaking of which, now we're talking about Kevin Warsh in his new role, and basically just got to choose who is he going to disappoint. And that's what Bloomberg is betting on. The president is who he's going to disappoint, who has been pushing for substantially lower interest rates from the Fed for, I don't know, pretty much since the day after.
Since 1946, the year he was born, yeah.
Or more specifically, since he appointed Jay Powell to head the Fed, he's been pushing for lower interest rates and hasn't largely gotten them. And the question is he going to disappoint the president on that front, or is he going to disappoint the other 11 voting members, right? 12 total, 11 others, on the Federal Reserve, who want him to be considered a serious person on monetary policy and to actually stamp out the inflation that we're starting to see in more earnestly here in 2026? I don't see how you can appease both parties right now.
It's a weird question to even have to ask.
It is.
Should an officer of the federal government be more concerned with his duty to Americans and his constitutional, indirectly, because the Fed wasn't obviously part of the original constitutional scheme, but anyway, you know what I mean. Who should he be more worried about? All of us and inflation and the hardships that inflation imposes, or the president tweeting nasty things about him? I assume if he's got any spine at all, and I'm not sure that he does, I'll say the jury's out.
Sure.
If he's got spine, he'll do his duty. If he doesn't, he'll be cowed by the president, keep interest rates too low, inflation will spiral out of control, and then somebody's going to have to come in and clean up the mess.
It appears that markets, at least, are buying that he's going to do his duty, because when we take a look now at the likelihood of interest rate moves, and I'm not going to look at the short term because the June meeting is now 8 days away, and so there's not much to be seen there. But when we look forward all the way to December and the markets and how you bet on these things, there is currently a 99.5% chance being priced into markets that rates are either where they are now or higher. And I think the point that many are now making is that rates right now aren't restrictive. And I think you probably fall into that camp. And
there's the reason for that. It's just not like my opinion. The higher inflation goes, the lower the real rate becomes. By that I mean, what matters for all of us is the real rate of interest, the stated rate minus inflation.
So what I can earn on a CD minus the rate of inflation
that's
is what matters to me.
what affects my standard of living.
Yeah.
And if the thing you're minusing, inflation is going up, the real rate is coming down. So Warsh may do nothing for a year and still be presiding over an easing. You've got to raise rates with inflation.
Right. And I think right now, well, we will see what he has to say in just about a week's time. I don't want to guess too much about this, but I think there are plenty on the Federal Reserve Board who would like to take a wait-and-see approach here with, hey, what happens with oil price shock inflation? Can we wait this out a few months and then see oil prices come crashing down? They definitely want to take that approach, because the risk, we've been talking about the risk to the upside of inflation. The risk to The other side of this, if the Fed goes forward with a rate hiking cycle, is recession. It's a crashing down of the economy that ultimately does defeat the inflation that we're presiding over, but also results in a bunch of people unemployed. And probably elections not going terribly well for those in power. Let's take a quick break. When we come back, I've got a report from the Federal Reserve about how people are feeling about this economy. We've got Michigan sentiment due out. Is that last week or this week?
I think it's Friday.
Friday of this week. So talking a little bit about people's feelings next on the Financial Exchange.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. A trust can do a lot more than simply pass assets to your family. Certain trusts may help keep your estate out of probate, protect assets for your children, and in some cases, even help reduce estate tax liability. Cushing & Dolan has created a new guide called Demystifying the Top Estate Planning Trusts. It breaks down some of the most commonly used trusts in estate planning, including trusts designed to help families plan for long-term care, protect beneficiaries with special needs, and help keep life insurance proceeds outside of a taxable estate. You'll also learn why simply having a trust isn't enough, because if it isn't properly funded, it may not accomplish the goals you expect. To get your free copy, call Cushing & Dolan today at 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One missed retirement deadline could cost you thousands of dollars. Our new guide, Understanding RMDs, breaks down the rules for required minimum distributions, including when you have to take them and what can happen if you get it wrong. This isn't just about taking money out of an account. Your RMDs may affect your tax bracket, the taxation of your Social Security, and even whether you pay higher Medicare premiums. This guide also covers common mistakes people make, like forgetting about old retirement accounts and mishandling inherited IRAs. If you have money in a retirement account, this is information you need to know. Call us right now at 800-393-4001 to get your free copy of Understanding RMDs. That's 800-393-4001, or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Daily financial content in your feed when you want it. Follow the Financial Exchange on Instagram. This is the Financial Exchange.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. Hundreds of runners have already registered for this year's DAV 5K, and the event is on pace to sell out in record time. So head to dav5k.boston for all the information about how you can participate this November or make a donation to support our great American heroes. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
I'm going to read 3 headlines here that Tucker put in a row, and I want everybody to listen and guess which side of the bed Tucker woke up on this morning, if you don't mind. So, first, from CNBC, household worries over finances hit highest level since July 2022, New York Fed survey shows. Next, from CNBC, 51% of U.S. adults say the American dream is out of reach for most people right now. Number 3, from Bloomberg, U.S. small business optimism falls to lowest level since October 2024. Tucker?
What?
Are you okay?
Yeah, I'm fine. I'm just putting in what the people want to hear, Mike.
Tucker.
Because this is what people think.
Tucker.
What?
Look at me. Are you okay?
I'm fine, man. I'm fine.
So
I'm
we've
a
got
man of the people.
We've got these 3 pieces about how unhappy Americans are that's being confirmed by the University of Michigan and their sentiment surveys. And I continue to still have no idea what to do about any of this information because it continues to repeat that this economy is as bad as it's been since 2022, or in the case of the University of Michigan Sentiment Survey, literally ever. Worst economy we've ever had, according to the University of Michigan Sentiment Survey. Worse than the depths of the Great Recession of 2008. Worse than when we were all sitting at home in March of 2020 from COVID. Worse than the 1970s oil crisis. And in spite of that, maybe Marc can cite the data better than I can, but consumer spending is up. People are still buying homes, cars, big ticket items in an increased pace compared to year prior. And so I continue to sit here and say, what do I do with data that tells me that everyone is pessimistic but keeps spending anyway? I don't know how to square those
What's
two.
the question we should be trying? We need to...
Why is everybody so pissed?
No. What do we want to know? I think we need to step back. We're deluged with, I'm not using that verb right, but you know what? We're flooded. Sounds better.
Flooded's better, yep.
I think they mean the same thing, but for some reason flooded doesn't sound wrong in that context.
Yeah.
You know.
If you're an English teacher, you can text
whatever. I'll ask Chuck when he's
362-1385.
Yeah. That's totally fair. Please correct me. What are we trying to answer here? We're trying to get some measure, and measure means a number. So you have to parse every word here.
Yep.
We're trying to get some measure, a statistic. Statistic means an estimate, by the way. We don't know the actual population value. Again, I'm parsing here deliberately. I'm not just being pedantic. Well, I am, but for a reason. We want to know, are people happy or not? They're telling, one way to do that is just to ask them, are you satisfied? They're saying no. So clearly there's a disconnect between measures, and people have known this for a long time. This is not like a deep insight on my part. A disconnect between the typical measures of economic health, unemployment, inflation, and GDP. Unemployment's low, epically low. Yep. Inflation is rising, bad. GDP was a little bit below trend, but okay last quarter. So if you want to connect surveys to hard data, I guess what you could do, there is a one-to-one correspondence right now between the direction inflation is going in and what people are saying about the economy.
Sure.
We witnessed the same connection
in 2022.
Yeah. So when people answer a question like that, the way they're answering it, you look at the holy trinity, forgive me for the sacrilege, of economic statistics: GDP, unemployment, inflation.
Okay.
There are 3 of them.
Yeah.
Thus the trinity. You look at those 3 and ask which is going in the wrong direction. Inflation. People clearly weight that very heavily because it hits you in the face every single day when you fill up, when you go to the supermarket, when You notice that your standard of living, you get your tax bill, it's gone up. I get my water bill, it's gone up. They're going up in percentage terms faster than my salary. That's actually been the case for the past few years. Others can figure that out too. To me, and this is not a profound observation, it comes down to the rate at which prices are increasing relative to wages. GDP could be above or below trend. Nobody understands. The president doesn't even know what the rate of GDP growth is. No, that could have been true, but I could be speaking about Biden, Bush, Obama. They don't know for the most part. But everybody knows what the rate of inflation is, Mike. And slightly more people know what the rate of unemployment is, but not as many who know what the rate of inflation is. Tucker, is that? You don't do this for a living. You're an engineer, a radio engineer. Is what I just described, does that resonate with you?
Yes.
Okay.
Yeah, I think that's right. And Mike, you say that people are spending, and they are. Yeah, absolutely. But then you can also point the other finger and be like, well, credit card debt levels are at their highest level of all time.
They are, but
so they're spending and just going further into debt.
Yeah, they are going further into debt.
Feel bad.
I don't even see discretionary items getting pulled back, right? We talk about first-class cabin tickets and luxury hotels and all sorts of things that people are clearly still spending on.
Those are top earners.
At record levels. Yeah, it could be just that they're top earners. I heard this, I'm forgetting which Fed official pulled this from their beige book. So the beige book that the Fed puts together is basically interviews that they do with business owners and individuals in their community, and then they put it together, and it's not data. I don't think you could consider the beige book to be data,
soft.
Right? It's surveys
data.
of how people feel.
Yeah,
about
I mean,
things.
it is data. It's numbers in a spreadsheet,
Sure.
I guess, but it's not hard data.
And I think it was a Federal Reserve member from either St. Louis or Chicago that brought it up, that he went out to the community and tried to answer that question of why do people feel that inflation is so much more difficult than a recession. And one person summarized it pretty well to him, which was in 2008, when unemployment was way higher and we were all, afraid of what was going on, I could still have people in my community that were doing all right financially because they had kept their job. Even if I hadn't, I could go to them and maybe it was borrow money from them or lean on them for financial support in my own community. In 2022, when inflation was up 9%, everyone of my socioeconomic background, 100% of us, experienced inflation.
Yeah,
and that was not the case with recession.
That's, I think,
the key. And I think that is a key insight as to why people hate inflation so much more. We always tend to think that our outcomes are going to be better than society's outcomes as a whole. And so even when I fear, recession, even when I fear 1 in 10 people losing their jobs, not everybody loses their job and not everybody experiences that financial devastation, whereas inflation might not be complete financial devastation, but every single person feels it to some
Inflation
degree.
is also perceived as a symptom of bad policy, bad leadership. It's somebody's fault. It's the Fed's fault. It's the guy that started the war's fault. No offense, you may like the war, you might not, but this inflation falls squarely in the lap of the president who started a war that has driven up energy prices that are now seeping through the economy. You may say that's great. Iran can never have this or that. I don't care about the inflation, or you may hate it. Either way, it's undeniable. Inflation can always be pinned on somebody. Recessions are often perceived as acts of God.
You think so?
I do. I don't think you get blamed if you're in power, but I don't think anybody would say H.W. Bush caused the 1990 recession.
I think you still get blamed, but maybe
you get blamed
can't
for not
directly
being
attribute to
decisive
it. Yeah.
and being able to fix it.
Markets have turned strongly negative now. NASDAQ now off 0.8%. S&P off 1/3. We'll be back after a few minutes here getting you a full market update as markets have swung strongly into negative territory. We'll be right back.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. and learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
A trust can do a lot more than simply pass assets to your family. Certain trusts may help keep your estate out of probate, protect assets for your children, and in some cases, even help reduce estate tax liability. Cushing & Dolan has created a new guide called Demystifying the Top Estate Planning Trusts. It breaks down some of the most commonly used trusts in estate planning, including trusts designed to help families plan for long-term care, protect beneficiaries with special needs, and help keep life insurance proceeds outside of a taxable estate. You'll also learn why simply having a trust isn't enough, because if it isn't properly funded, it may not accomplish the goals you expect. To get your free copy, call Cushing & Dolan today at 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We've got a guide available this month on required minimum distributions. And, Mike, I want to talk about common mistakes that we see. Sure. Let's start first. People not understanding the difference between inherited and non-inherited IRAs.
Yeah, so if you've ever inherited an account that is retirement in nature, you've dealt with these complicated rules. And to make it more complicated, the rules have changed over the last several years. But suffice to say, unless you meet some very specific scenarios, in most cases, if you inherited an account from a non-spouse, then you're going to have 10 years to empty that account, pay any of the taxes that are due on it, and move along. But in addition, there are annual required minimum distributions, and it is very complicated.
What about a situation where someone tries to delay taking their RMD? What kind of problems can you run into there?
Well, one, if you delay your first year RMD, then you're going to have to take 2 in the same year, and that can really add to the tax burden. But more generally, if you just wait to deal with your future RMDs until you're 73 or 75 years old, you just have fewer options. It's going to bump up your income. You may end up paying higher taxes. You may end up paying higher Medicare premiums. Your Social Security could become more taxable. So it pays to plan early when it comes to RMDs.
Our guide this month is titled Understanding RMDs, and there are 2 different ways you can request it. The first, you can go to armstrongadvisory.com and request it there. The second, call 800-393-4001. That number again is 800-393-4001, or request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Welcome back to the Financial Exchange. I started off the program exactly an hour ago. I'll see if I can quote myself, saying that the market was clawing back its losses from Friday of last week, where the S&P 500 closed down. We opened up the show with the S&P up, was it 0.7%, or was that the NASDAQ? Thereabouts. We've now completely flipped. The S&P 500 has gone through a full percentage point reversal. We started the day up 0.7. We're now down 1/3%. NASDAQ even more so. Started up the day up 1 more.
Over 1, yeah.
Yeah, and we're now down 0.8%. All of this on no news that I can detect. So
it was briefly down 1%.
Yeah, so it's improved a little bit, but a volatile day of trading as we kick off the program here on, again, no real news. We're getting the inflation data out tomorrow morning. Yeah, is that 8:30 a.m., the CPI data?
Yes.
So we'll be digesting that on the program tomorrow. Hold on. Today is Tuesday. Yes, next week we'll be getting a Fed meeting, first for Kevin Warsh to preside over, and I think a lot of people will be latching onto every word he says there. And we'll also be joined in the next segment by Corey Adams from Robert Half. Done a survey on just the role that AI is having in the workforce, which has obviously been front and center for a lot of people's minds, including especially new college grads. So Corey will be joining us next on his results from the survey, tips for workers out there looking for the job, etc. Want to start with this piece from the Financial Times, Marc. Earnings, not valuations, are fueling the U.S. stock market. So the story that we've been, I think, confirming or putting out there over the last several years anyway, has been about this stock market getting more expensive, right? It was not the result of just, hey, companies are doing really well and therefore stock prices are going up, but rather people's willingness to pay for stocks and the price they're willing to pay had been going up. The authors over at the Financial Times make the point that this year, well, one, as we know, earnings have been exceptional. If you set aside the mega cap tech stocks, the median S&P 500 companies still reported growth of 14%, which would make it the strongest quarter in over a decade outside of 2018 tax cuts and the 2021 COVID period. But the forward 12-month price-to-earnings ratio on the S&P 500 this year has actually gone down compared to the same time last year. We're now at 21 times earnings compared to 22 times future earnings, according to the FT. And
well, that's because analysts have increased their expectations of future earnings. That's a little bit circular. Okay, I'm not going to get hung up on that point. Sorry. Go ahead, please.
That's all I had. So I guess my point would be shoot it down.
I don't want to shoot it down. I'll just make the point that today's earnings aren't predictive of tomorrow's earnings for the market as a whole. You can prove that to yourself very, very simply. It's done graphically, or you can, if you prefer the statistics, you can do it that way. Look, you would get excited about earnings past 12 months if you thought that they said something about future earnings, but in a statistical sense, they don't. That's all I'm saying. I'm saying today's earnings are not predictive of tomorrow's. Not at a company level.
Sure.
It can convey valuable information. What corporate officers say in earnings conference calls can convey valuable information. I'm talking about for the market as a whole. So over the last 4 quarters, year, earnings are up. I'm just going to call it 30%.
Mm-hmm.
Stocks are up.
High 20s, about 30.
I'm embarrassed to say I don't know.
I think it was 28.6%
for earnings.
Oh, for the S&P 500
and
growth.
Earnings, S&P's up less than that. So by one measure, the backward-looking measure, stocks are more reasonably priced today than a year ago. But if you think the spectacular earnings of the past 12 months are a bit of an aberration because they're driven in part by, say, the realizations, as you've been pointing out, Mike, of certain companies, of their interests in privately held AI companies.
Yep.
So if you think there's a lot of one-offs, then forget about the statistical argument, though I find that convincing. You don't need any convincing that the past 12 months are somewhat of an anomaly, and nobody should be thinking we're going to get, I don't know, even high teens from earnings over the next whatever period your forecast horizon is.
And by the way, so they're looking at the forward price to earnings ratio, which again I think is a
we
reasonable.
We don't want to do that. You don't want to do that.
I think there's a reason why you look at forward rather than trailing earnings, but nonetheless.
Okay, excuse me. It depends on why. I'm sorry. I keep interrupting you. Please go ahead. Sorry.
I think there can be a reason why you look at forward earnings as opposed to previous earnings or realized earnings already. But even if you do, I want to make the point here that, yes, stocks might have fallen from a forward PE of 22 down to 21, which is still multiple percentage points higher than we have been on a historical average basis for any long-term time period.
Okay.
Valuations are still rich at 21 times future earnings, even if you believe that they're going to come in.
It's good to keep in mind that PE is a ratio. It's P over E. So you can say...
That's why they call it that, actually.
Yeah. I have to... People may not know that. They hear PE.
Sure.
And they're giggling because we all giggle when we hear PE.
Yeah, always.
But even internally, I can't say it without telling people, now please don't giggle, and then cracking up myself.
Yeah.
Okay. P to E can be gamed. You could just say, well, my E went up, so my P to E looks better. Just keep that simple fact in mind when you hear people throw around this ratio or that ratio. You got to ask or be aware of, if you're not face-to-face or whatever, what E they're using. You can only there's only one P, and that's the price of the index today.
Yep.
The E is where things can get more creative.
One that you like to cite, Mark, is the Shiller PE ratio, and I'm looking at right now. The current Shiller PE ratio is sitting at 41.67.
That's astonishing.
That's higher than it was in 2021 when we were talking about the meme stock mania. It's higher than it was in 2020. The only time in history that we have this data set, by the way, going back to 1870, so pretty substantial data set. The only time that it was higher than where it is now is and remains November of 1999.
I say astonishing because it's remarkable because it's rare. Not that I find it jarring, although I do a little bit. I guess it's quite high. Look, if you think
we're in the 1% range of observations.
So the E there, the P there is the P that we all use. The E there is the last 10 years worth of. It's like an average, and it's adjusted for inflation. The argument for using that is that it smooths out business cycle ups and downs.
Like
and it smooths out
boom in artificial intelligence.
Or it smooths out potentially the one-offs, like the one we may have experienced over the last 12 months, first quarter last year to first quarter this year.
Let's take a quick break. When we come back, Corey Adams from Robert Half joining us next on AI in the labor force.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. As you age, the IRS stops asking you to save for retirement and starts insisting that you take money out. Those withdrawals are called required minimum distributions, and if you don't take enough, you could face a penalty of up to 25% of the amount you were supposed to withdraw. If you wait too long to take the first distribution, you could end up with 2 taxable withdrawals in the same year, which might push you into a higher tax bracket or increase your Medicare premiums. Our new guide, Understanding RMDs, covers this issue and others to help you prepare for this important retirement deadline. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
Joining us now is Corey Adams from Robert Half and their recent survey on the AI impact on the workforce. Corey, this is a popular one, well-timed. We're just getting out of college graduation season. I think people have probably seen some of the highlight reels there and spoken to graduating seniors who are worried about the labor market, let alone, folks later in their careers that are worried about upskilling. What did you find in terms of employers' expectations for how many people they're going to need to hire in this new age of artificial intelligence?
So let's just start with the research, and great to be with you this morning, Mike, and I appreciate you always having me here. So the research we conducted showed that 88% of organizations are using AI, and 57% are optimistic about being integrated into their current workflows. 54% of executives expect AI to lead job growth, not contract it over the next couple of years, and that's compared to just 23% who actually expect a net decrease. And then this is the big key finding here. More than 3 in 10 employers eliminated positions after implementing AI only to rehire those roles back. And so this has given rise to AI hiring corrections, which certain roles were cut during early AI adoption are now being later reinstated. And so that's our most recent research. What I would also just share to your original question in terms of what candidates can seek or college graduates, I mean, we're all looking at the same numbers. You're looking at them, I'm looking at them. And, at the end of the day, where we are right now is unemployment still remains really low, and the job openings are still above the historic norms. And so, I think what I would say is that there are some signs of movement, which should be encouraging for everybody. The hiring rate rose 3.5% in April, which is the highest it's been since May of 2024. Yeah. And then, listen, we saw from ADP that the private employers added 122,000 jobs just last month. And we saw all employers of all sizes were hiring. And so the thing that jumped out to me is that 8 out of 10 sectors showed gains last month, including professional and business services and financial activities. So if you take all of this together, if I'm a hiring manager or I'm a college graduate about to enter the workforce, for me, all of this is pointing to some gradual improvement for everybody.
Yeah, I was going to say that, it's nice when the data lines up perfectly with a theory here, but, last year the pace of job creation was basically nothing. It was a very slow pace of job creation for 2025. So far in 2026, we've seen that rebound substantially, not just last month, but I'm guessing now we've averaged over 100,000 jobs created per month compared to almost nothing last year. And that does line up with what you're saying here, if that's part of the cause now. As an employee, right? Like, what should I take away from this? I speak to people frequently, especially in high-tech roles, that are really worried about their job security. They're worried about upskilling and learning this new technology and implementing it in their day-to-day. What are you hearing from employers now that they seem to have a firmer grasp on these tools?
So I think from an employee standpoint, what I would say is I would take the following away. Number one, AI is more likely to change what you do than actually eliminate your role entirely. Workers who embrace technology and focus on learning are better positioned to stay relevant, whether it's in your current job or looking for a future job. And then listen, human skills such as communication, collaboration, problem solving are becoming more and more valuable. If you want to go a step further, let's talk about how to future-proof yourself. You're going to want to build AI literacy without overstating experience, which means that authenticity matters more than ever. So you're going to want to focus on real, transferable skills and concrete examples of your actual impact. And so you want to lean into continuous learning and be able to demonstrate that you're adaptable.
Do you have some specifics? Like, I'm really curious about those companies that laid people off and then are finding themselves rehiring. I don't know how many companies you spoke to, but were there some themes there as to how that happened and why they ended up, I guess, over-guessing what the technology could do ultimately?
Yeah, I do. And so let's just start with this. The early AI adoption helped some companies automate routine tasks, but many organizations ultimately underestimated how much human judgment, context, and decision-making these roles actually required. So I think for the most part, hopefully we can all agree, but AI works best as a productivity tool and not a full replacement. And so companies in this moment are recalibrating basically after seeing gaps in quality, execution, and oversight. And like past technology shifts, this is less about elimination and more about reshaping work and reshaping roles. And so the data that supports this are kind of the responses that were given in terms of why these roles were hired back. And there's a lot. I won't go through all of them, but I will start with this. They're all for the most part in equal measure. So the first is that the role required institutional knowledge or context that AI couldn't replace. The role involved relationship management that AI couldn't replicate. AI required more human oversight and quality control than expected. AI tools weren't fully and consistently adopted across every single team. And then finally, risk and compliance concerns emerge without a human in the actual role itself.
Yeah, sure. Where, I guess, is the low-hanging fruit, right? Like, if I'm in a specific type of role, which ones do you think are still fairly well insulated, and which ones do humans just not? Are humans just not all that important anymore in terms of their future in those roles?
So we know and hopefully recognize that AI lacks unique human traits, including critical thinking, collaboration, creativity, and applying insights in nuanced real-world situations, all of which, as we know, are really critical and crucial to running a business. And so we've heard from hiring managers that they say that soft skills that most complementary to AI usage is that critical thinking, is the problem solving, it's adaptability, it's continuous learning, and it's creativity and innovation. And so within this research and the data that we show in terms of like what's the most resilient, it's more about see who needed to hire back because they made some cuts that were probably a little too premature. And so we have it listed out by percentages by industry. And so our legal respondents hired back, 40% of them said they had to hire back. You then had sort of the big three, all around 30%, which was healthcare, marketing and creative, and then finance and accounting. And then from there, you had human resources at 28%, the tech space at 24%, and then administrative and customer support was at about 25%.
Corey Adams from Robert Half joining us today to talk about their survey on the impact of AI and the perhaps not surprising, but perhaps surprising to some, the pace at which employers need to go back and rehire those that they laid off with the new technology. Corey, thanks so much for joining us. Appreciate it, and we will talk again soon.
Thank you, sir. Talk soon.
Another day of World Cup trivia here on the Financial Exchange. The 2026 World Cup is the first to feature three host nations, the U.S., Mexico, and Canada. The U.S. and Mexico have both previously served as host nations for the World Cup. Mexico last hosted in 1986. So, trivia question today. What year did the U.S. host their first World Cup? Once again, what year did the U.S. host their first World Cup? Be the fifth person today to text us at 617-362-1385 with the correct answer, along with keyword trivia, and win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us to the number 617-362-1385 with the correct answer, along with keyword trivia, will win that T-shirt. See complete contest rules at financialexchangeshow.com.
While equity markets are deteriorating, we are also seeing oil prices fall substantially. They're down now 4% after the U.S. Energy Secretary said that Hormuz ship traffic is increasing. We will see. Again, that's one press release here. But the oil market generally just continues to defy, I think, my own expectations anyway, and more people are now looking at China and what they have been doing. Roughly, they have cut their imports of oil by about 5 million barrels a day. That's equivalent to almost half of the supply deficit that was coming out of the Strait of Hormuz. Some of that is also being plugged by U.S. exports, which are winding down and getting to critically low levels of reserves here. So we will see how much longer that can continue. But more and more, when people are talking about the surprise to oil markets and why, trying to come up with an explanation as to why they are prices remain so low here, believe it or not, at $4 gas and $87 a barrel, more and more it's being pointed at China and the curbing of imports that they have seen. We're going to take a quick break. Full market recap, which has completely reversed itself from early trading, is next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. As you age, the IRS stops asking you to save for retirement and starts insisting that you take money out. Those withdrawals are called required minimum distributions, and if you don't take enough, you could face a penalty of up to 25% of the amount you were supposed to withdraw. If you wait too long to take the first distribution, you could end up with 2 taxable withdrawals in the same year, which might push you into a higher tax bracket or increase your Medicare premiums. Our new guide, Understanding RMDs, covers this issue and others to help you prepare for this important retirement deadline. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. Now, do you lose control if you transfer your assets to an irrevocable trust in order to protect them from long-term care expenses?
Well, that's great when you mention that irrevocable trust, but limit it to the kind of trust where you're protecting it from the cost of long-term care. Because as the guide says, there's 7 different kinds of trusts that we're trying to demystify. And there's also many kinds of irrevocable trusts out there, not just one type. So many people think there's just one type. But this particular type, where you're trying to protect it from the cost of long-term care expenses, the answer is no. You do not lose control over your assets. There's a whole spectrum of control with irrevocable trusts. And this one, you keep about 95% control. Like, you can live in your house, you can sell your house, you can buy another house, you can invest your money, you can manage your money, you can collect the income. Even the tax liability of these trusts are designed to be at your own rate. In other words, they are grantor trusts. You don't even pay any higher income taxes when you have this irrevocable trust. So this kind of trust, folks, you keep control and you protect your assets from the cost of long-term care.
Call right now for your free copy of Cushing & Dolan's comprehensive guide titled Demystifying the Top 7 Estate Planning Trusts. It will help you determine what type of trust is right for you and your family. Call 866-848-5699. That's 866-848-5699. Or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, after a strong rebound to begin the day, markets have now completely reversed course and are selling off. Oil prices pulling back also after President Trump said that a deal with Iran was only days away. Right now, the Dow is down about 0.6% or 289 points lower. S&P 500 down 1.1% or 83 points lower. NASDAQ selling off nearly 2% or 495 points. Russ 2000 is up about 1/3%. 10-year Treasury yield is flat at 4.55%. And oil down nearly 4%, trading right around $87 a barrel. The National Association of Realtors said sales of existing homes rose 3.2% in May over the previous month to a seasonally adjusted annual rate of 4.17 million, the biggest increase since December. Meanwhile, shares in U.S. drug maker Nuvalent are surging 39% after UK biopharmaceutical company GSK announced a $10.6 billion agreement to acquire the Boston-based cancer drug developer. Elsewhere, ski operator Vail Resorts cut its full-year forecast, where low snowfall weighed on visits and revenue. That stock down by 5%. And Apple dropping over 3% following the tech giant's worldwide developers conference yesterday. Apple unveiled its new AI-powered version of its Siri digital assistant. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: what year did the U.S. host their first World Cup? That would be 1994. And Dawn in Nashua, New Hampshire is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Dawn, and we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Congrats, Don. Before we move on, Tucker, I want to just talk about the upcoming event we have from Armstrong. That work for you?
Yeah.
June 25th, we are planning a retirement planning seminar. Specifically, what we're planning on is a discussion of Social Security and Medicare essentials. We did one of these a couple months ago, very well received, and people have a lot of questions about these two programs. Can't tell you when either of them are going to go belly up, because I think that Congress is likely to fix that problem the last second. But everyone has questions about what is the right claiming strategy for their own Social Security and what type of health insurance plan they're going to need to fit their family's needs. And we're going to be joined by two who have really a lot of expertise on these two subjects. Susan Powers will be talking about Social Security. If you have questions about how it's going to interact with your pension, what to do if you have a spouse that's younger than you, if you are divorced or widowed and facing down those Social Security benefits, she's got all the answers when it comes to all of this. It is a complex subject with a number of different strategies, some of which have been phased out due to rule changes over the years, some of which are still very much intact and important. Effie Vasulis is going to be talking about Medicare, the essential questions that you have, answering them, how the programs work state by state, and what to consider if you are planning on, say, relocating in retirement or traveling a lot versus staying home a lot in retirement, what you need to focus on in terms of getting registered for Medicare, the key dates and essentials. If you'd like to attend, it is free to attend. The next one is on June 25th in Quincy at the Marriott Quincy. You can register at armstrongadvisory.com. If you have questions, you can call Armstrong at 800-393-4001. But again, free event, June 25th at 5 p.m. in Quincy. Free to attend, armstrongadvisory.com or 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
I'm worried here that Block in Bloomberg, Block is the owner of Cash App, a payment system, may be misinterpreting some of their user bias that they have here, but what they're saying is that Gen Z is redefining how Americans earn a living, and based on data from their app, they are finding that a larger portion of Gen Z than any other demographic is pulling in income from multiple jobs, and they are using the Cash App to receive that income. If you use Venmo, this is a similar type of application to that one, and what they're finding is that, across Cash App's customer base, 57% generate income from freelancing, entrepreneurship, content creation, etc. And a lot of those come from younger Americans. I think my point would be that, one, younger Americans do tend to work in multiple jobs more than others. And today they use the technology that's available to them, which is something like Cash App or Venmo. Whereas when my father was 22 years old and got a, second gig lifeguarding for the summer, he probably didn't get paid via a mobile app because the mobile phone didn't exist, and instead he got handed some cash. So we don't have really great data as to whether or not working multiple jobs is a newer phenomenon. To some degree, it is certainly easier to do so. You can go and sign up for Uber within a number of hours and start working multiple jobs and quote-unquote freelancing. But I don't have any reliable data, Mark, and I don't know if you're looking some up right now to try and get at it.
Yeah,
but,
of course.
But I'm just not convinced that, Cash App's data on which generation is using it most for second jobs tells us much about structural changes to the labor force.
I think you pointed out the main issue with generalizing from this early on in your comments. It's not a random sample.
Yeah, you're only polling your customers who are comfortable using a new technology.
Yeah, it's like going into church and saying, 90% of people oppose abortion. Well, yeah, you ask the people at Mass on Sunday.
Yeah.
I say Mass. It's
Sure.
a Catholic name for a service.
Oh, it is?
Well, I don't know. Some people call it a service, right? The
Yeah,
Mass
fair.
is like a weird Catholic thing. Anyway, it's not weird. I just mean to some people it might be. All right, I'm going to stop right there and just move on to my main point, which is be careful when you're reading something like this and people are generalizing. Ask about the sample. Did they even did they try to obtain a random sample, even among their customers? It doesn't sound like they did. It's like when a 401k record keeper says, 20% of people took out hardships, hardship loans for foreclosure, medical expenses that aren't insured, stuff like that. That's of the population they happen to record keep.
Sure.
You got to be careful.
So, long story short here, I do think there's probably a business opportunity for companies like this who can provide new services because so much of these payments are coming through these apps and help them, do better at filing their taxes and qualifying for mortgages and offering more banking related services because again, these services, Cash App, Venmo, they are not run via a traditional bank. But again, leaping to the conclusion that, hey, now teenagers are working multiple jobs more than baby boomers, well, of course they are. But I'm not sure you can conclude that that is going to be a permanent transition. In fact, I suspect that it's very much not going to be anything permanent as they get into more serious, higher-paying jobs that demand more. They're not going to be able to, hold down multiple jobs.
There was some research done on this about 10 years ago at the BLS, Bureau of Labor Statistics, by one of the researchers there, and they concluded that the rate of multiple job holders fell, I'll just say by in half, even though it's not quite that dramatic, over the 20 years ending about 10 years ago. So there was a trend in place as of about 10 years ago. This trend could have reversed. It's not dramatic. It was dramatic in the 90s. Good economic times, fewer multiple job holders. Could also be demographic. Baby boom getting older, hitting their peak years, and needing to work fewer jobs. I guess that's basically the same thing.
Yeah.
But, like you said, younger people are more likely to work multiple jobs.
I will acknowledge that it is way easier to find a second job now than it has ever been.
You can do it online from...
Yeah,
home.
You can sign up online to deliver food via Uber or any of these applications, and it is quite possibly easier to do that today. But I don't know that states much about how the labor force needs to be reshaped. Let's take a quick break. When we come back, need to update you on markets because it's gotten worse, not better, and we're going to play a little bit of stack roulette next.
Get real-time financial insight as news breaks. The Financial Exchange is live on X. Watch the show and follow us for the most up-to-date business news you need to know. This is the Financial Exchange.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One missed retirement deadline could cost you thousands of dollars. Our new guide, Understanding RMDs, breaks down the rules for required minimum distributions, including when you have to take them and what can happen if you get it wrong. This isn't just about taking money out of an account. Your RMDs may affect your tax bracket, the taxation of your Social Security, and even whether you pay higher Medicare premiums. This guide also covers common mistakes people make, like forgetting about old retirement accounts and mishandling inherited IRAs. If you have money in a retirement account, this is information you need to know. Call us right now at 800-393-4001 to get your free copy of Understanding RMDs. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A trust can do a lot more than simply pass assets to your family. Certain trusts may help keep your estate out of probate, protect assets for your children, and in some cases, even help reduce estate tax liability. Cushing & Dolan has created a new guide called Demystifying the Top Estate Planning Trusts. It breaks down some of the most commonly used trusts in estate planning, including trusts designed to help families plan for long-term care, protect beneficiaries with special needs, and help keep life insurance proceeds outside of a taxable estate. You'll also learn why simply having a trust isn't enough, because if it isn't properly funded, it may not accomplish the goals you expect. To get your free copy, call Cushing & Dolan today at 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
From markets to money to business and financial news, watch the Financial Exchange every day on YouTube. Hit that subscribe button and keep up to date on the market news you need to know. This is the Financial Exchange.
First over to markets, we've got now a full-on sell-off happening in equities. The Dow is currently off 250 points, 0.5%. S&P 500 down 75 points or 1%. NASDAQ off 450 points, about 1.7%. This is especially of note because all three indices started the day positive, and so we've now seen on the NASDAQ close to a 3% swing, S&P about a 2% swing in trading since opening up the program. So we will see where things go in the afternoon, but so far investors taking another step back on U.S. equities.
It's the flip side of those high multiples we were talking about earlier, high P to E. Those are reflective of a buoyant sentiment. They tend to go up when people get excited about the possibility of current high earnings repeating into the future. When that sentiment changes, people's forecasts change for whatever reason, and it can happen on a dime, you hit these air pockets. This isn't an air pocket. This is a normal, we're just not used to it. But
markets go down too, believe it or not. It does actually
that's
happen.
the best way to put it.
Marc, you seem very confident about Stack Roulette. Your stack of stories is now in the trash, so I'm going to kick things off to you as to what we're talking about next on Stack Roulette.
Just cleaning Chuck's desk for tomorrow. Story from Bloomberg, NYC pensions boss, the comptroller of New York City, says SpaceX's disregard for shareholders has no precedent. What he means there is that SpaceX's governance structure gives 80% of the voting rights to Musk.
Yep.
He's also chief executive. He's chief technical officer as well as chair of the board. It's basically a dictatorship.
Yep.
And that probably appeals to some people who trust his judgment like implicitly, who have kind of a blind faith in it.
If you're looking for a company with checks and balances, SpaceX does not appear that it will be the one.
And it's over. We talked about this in the last hour. We were talking about where's the capital going to come from. They want to raise $75 billion by selling 560 million roughly shares. That's less than 5% of the company, though.
Yes.
Most of it will remain with Musk and private
some other key
investors,
people. Yep.
venture capitalists, other early investors. So it's going to be opaque. And to an extent, it's a leap of faith.
Yeah, you're along for the ride.
Unfortunately.
Now, I will also say that most retail investors don't buy shares in companies to influence the board and change the direction of a company.
And many retail investors and sophisticated institutional investors like New York City's pension aren't going to have a choice because they may have assets invested in an index tracking fund. We all use them through our 401k plans and other vehicles, other structures. But these pension funds do it in large amounts, hundreds of millions of dollars at a time. And they're going to be compelled to buy some SpaceX.
Yeah.
It's small as a percentage of overall assets invested in an index tracker. And it's not being...
And it's not universal either. NASDAQ's doing it, S&P's not.
Yeah, NASDAQ is, FTSE Russell is, although it'll be capped at a lower rate than NASDAQ. S&P, not at all until it's profitable.
Yeah. And a year after IPO, there's also the public float rule that I don't know that they'll ever get. Well, I'm sure they'll get around at some point, but yeah.
Yeah, I forget what their float rule is. I know NASDAQ liberalized theirs for this, right? They're going to let in 3 times as 75 billion times the 3 or 225, making it about as big as I think Qualcomm is the closest in that NASDAQ composite. So
Meta is launching a workforce academy to train workers. It's not coding. It is not website design. It is not social media expertise. They are training workers to build data centers because apparently they cannot find enough of them. They've launched or committed to spend $115 million on the program this year, piloting it in Louisiana, Ohio, Indiana, and Texas. They will be skilling up workers in the areas of electricians, HVAC technicians, and many other, blue-collar traditional roles here, guaranteeing those who graduate the academy a job building these data centers in these locations, and I guess doing what they believe needs to be done in order to get this stuff off the ground. I'm sure it's a bit of a PR push too, right? This looks good for Meta. Hey, you've been accused of wanting to kill jobs. Here we are creating a bunch of new jobs. So, I don't like to discount the public relations aspect of all of this, but I guess I would just ask one question. Does any of that sound disinflationary to you? I know we've kind of covered this already, but Meta is basically telling you we cannot find the labor needed in the public market in order to build what we want to build. So we are going to spend $100+ million training those people ourselves and shelling out the dough to go do this. I fundamentally do not believe that they would do this if they found they could find HVAC technicians and electricians at a reasonable
Or they don't
rate.
they don't want to use union labor. I mean, why not go to the trades and say, we'll give you the money. They already have the apparatus, the trades do. You go to the New England Carpenters, for example, We're going to build it. We have only a third of the...
Their answer is they believe they can do it cheaper by training them
Well, that's just it. Yeah, so I wonder how the trades feel about this. And I wondered what they're going to be... I'm not advocating necessarily for... I personally would, but whatever. And why don't existing institutions and structures provide them with the means to pull this off? And will these people be captive in any sense? Are they signing agreements? So you get trained.
Yep.
In exchange, you work exclusively for us. Part of me says, hey, let the market work here. Part of me also says, this is weird. Maybe I shouldn't look a gift horse in the mouth. People are going to get good jobs. They're going to get good skills.
Yeah.
And they can do whatever they want with them later.
So long as...
But I don't trust Facebook. I guess that's
I
what
don't
it comes
trust
down to.
Facebook
I don't
either.
trust Zuckerberg.
Yeah, that's actually
I don't
a fair
trust that
point.
he's not... Go ahead, sorry.
But
I have no basis for that, by the way. I don't know the guy.
I do look at all of this and say, okay, yeah, why are they doing this instead of going to the unions? Well, one, they think they can get the labor for cheaper by training it up themselves, and they have enough scale that they believe they can train these workers up themselves, have them sign some sort of non-compete, and that will be less expensive than going and hiring an existing expert in the same field.
Yeah, who's going to do the training? To what standards will they be trained? Are they going to try to mimic the construction trade standards? Are we talking about an alternative type certification? It's weird. It's like a parallel training structure for the construction trades. And if I were...
It's weird insofar as, we've never seen anything quite like...
Well, Henry Ford probably did something like it.
Yep.
But of course, go ahead.
But I guess that's the point, is we do have to go back pretty far to see programs like this. And I kind of doubt this is the last one. Right? We've seen it, I guess, a little bit from like TSMC, who has been sponsoring these types of job training programs. But those aren't, these are skill sets that presumably you can use elsewhere, whereas building semiconductors was pretty specified. This is, hey, we're going to train you to be an HVAC technician. I've never heard of a technology company doing that. This is pretty new ground that we are breaking right now. It's going to be very expensive, and we will see where my guess is it leaves us oversupplied with a whole bunch of things. Probably not HVAC technicians, but a whole bunch of things related to AI. But the boom continues for the time being. Not in stocks, though. NASDAQ closing the show down 500, nearly 20 points, or close to 2%. We'll have a full market recap for you tomorrow, in addition to May inflation data coming out tomorrow morning. Have a great rest of your day, folks.